Hey, we up. What's good, y'all?
What is up, family?
What's good? What's good? It's been a little minute.
It sure has.
Just a little minute, not a long one, just a little minute.
No, some slight, some slight. I took a little break.
Sometimes you gotta leave so they could miss you a little bit, AJ.
Man, just a
That's
little
all.
bit. Just a little bit, bro. You know,
You know.
you start getting them
But
DMs
we
like, hey,
back,
where y'all
y'all.
at? Where y'all at? It's like, we still
That's a
here, y'all.
fact. They
We with
definitely was
y'all.
looking like, did it get canceled? Y'all not coming on no more. What happened? Nah, we good. You know, as I take a slight drink of water, but nah, we just 1 week, had to take a week off for Mother's Day for sure. Had to take a week off for Mother's Day. I don't need y'all coming on here, your mama in the background waiting for you to call and you taking stock notes. We not doing that. We not doing that. You know what I'm saying? I had to call my own moms. You feel me? But we back tonight. It's just gonna be me and AJ rocking. We've been having some. We need some extra volunteers. So if you got some knowledge, please step up. I know it's a few of y'all. I might have to start calling names that y'all either done did it before, or I know y'all got something up top to share. But tonight it's me and AJ. We're gonna go over market cycle and emotions. It's definitely not gonna be long. It's not gonna be long. Just kind of like a quick recap because of the environment that we're in right now. It's a lot of fear going on. It's a lot of extras going on, and I just want to kind of bring everybody back to home base to some of the things that we've covered before. You feel me? So we started kind of late, so I'm gonna go ahead and get right into it. Let me see. Share my screen. Hey, is it a way for me to share my screen without making the presentation whole screen?
The whole screen, yeah, you would have to so you're trying to put like a chart on the side, right?
No, I'm trying to have my notes.
Oh, I see what you're saying.
Yeah.
You should be able to hit present and then still see your notes at the bottom, though.
All right, hold on. Let me see.
Yeah, in present mode, and it should still present you. Yeah. Boy, y'all better shout out my mentor. You feel me?
Hey, get me right. Get me right. Can you see anything?
It's coming. It looks like it's trying to load up for us.
Look, I'm impatient. They need to hurry up.
I know. But shout out Comics. They didn't really came through during COVID for me.
Ain't they?
What?
Let me refresh this again. Pardon the technical difficulties, y'all. I know y'all got some patience, though. Let's try this again. Present.
Mm-hmm.
Present. View. Be blessing me. I'm in here presenting. Blessing me here like that.
They had to come learn. What you mean?
All right, now is it
Yeah.
all right, cool. All right, so market cycles, y'all. It's a full screen for you though, AJ. You
Wait,
don't
no. I was just about to say, hold on. Because I'm trying to see. It ain't full screen, bro. Hold on. Oh, that little arrow pop out to the right, like right, come down. You see that little arrow, like look like they're going like this.
Yeah.
Yeah, try click on that. It's a little bit better.
I don't like that though. We need it all the way better. Oh, I see what I gotta do. Hold on, I see what I gotta do. My fault, y'all.
Bro, you good. Listen.
I think it's this one I gotta show.
There we go.
It's
You
better.
take notes. Yeah.
All right, cool,
We
cool.
rocking.
All right, y'all. So boom. So this basically what a market cycle looks like. So you got stage 1, stage 2, stage 3, stage 4, back into stage 1, right? So when we're looking at market cycles, the first stage is going to be the accumulation phase. Now, with the accumulation phase, the typical emotion that that you'll see in that phase is apathy. So you'll see a lot of indecision, indifference. You'll see a lot of people won't care about the stock or about the market as much during those phases because it's kind of dull, it's kind of boring. Typically, the people that are investing in the stocks or the market at that phase, they either know something that everybody else doesn't, or it's a big bank that's getting in early, or smart money who has a very contrarian thesis that they're trying to set up shop before everybody else does. So what you'll see is this typically happens after the market has bottomed. So on the left of this, well, you can actually see it on the right, but you'll see after stage 4, the market went in the downtrend, it bottomed. That's where you'll see stage 1. That's where you'll see accumulation, whether it be in a specific stock or the general market. Typically, the sentiment will still be bearish. A lot of the media and articles, they'll be putting out bearish articles because we just came out of either a significant downtrend or sometimes even a bear market. You know, accumulation phases will happen after a bear market. It's kind of like the sellers basically giving up. Like, it's not the heavy selling. There's some buyers there, but overall, the sentiment is still negative to neutral. Now, stage 2, you have what's called the demand phase, the uptrend phase, the market phase. Some people will call it different things, but that's where the early majority will start buying. So this is when you'll start seeing like the big investors buying. You'll start seeing more demand for stocks or more demand in the market. You'll start seeing some greed in here. So down here, can you see my pointer?
Yeah,
All
I
right.
can see your point, bro.
Cool, cool. So down here, right after we start breaking these highs from stage 1, that's where you'll start seeing the big banks get in. So that's where you'll start seeing some of the heavy buying, some of the pops. We'll see breaking of previous highs. That's where you'll start seeing the early majority. Some of the technical traders, you'll start seeing them start talking about, oh, we broke resistance from, you know, way back when. And you'll start seeing FOMO, right? So you, in this stage, this is where most people, the average investor, makes money. Stage 1 is hard to make money. Stage 3 is super hard to make money. Stage 4, if you don't know how to short or play puts, you're not going to make any money. You're going to lose money. So stage 2 is the most popular. That's when everybody's talking about the stock market. That's when everybody's trying to open up a Robinhood account. All your real cousins is hitting you like, hey, I'm trying to learn stocks. You definitely know we in stage 2, might even be getting to stage 3 at that point, but we're definitely in stage 2. Everything's rising. You will see like unemployment might start to rise during this time. People making so much money in stocks, valuations will climb, volume will get higher. So it's a very euphoric time in the market. We've definitely seen that in 2020, where we saw stocks go from a bottom and almost went straight to stage 2. They kind of skipped or had a very, very short accumulation period before we went right into demand, just because the crash happened so fast that once the buyers did step in, everybody bought, you know, with each other, you know. So now as we get from stage 2 into stage 3, Let me make sure I got my notes, y'all. Excuse me. So we get into stage 3, right? It looks like stage 1, but the sentiment is opposite, right? So it's not going to be as consolidated as stage 1 might be. It's going to be what they call whippy. It's going to have a wide range. There's going to be high highs. It's still high lows, but the range is a lot bigger than it would be in stage 1, right? So there's a lot of what they call like disagreement in the market. Sellers are fighting hard against buyers. That's when you'll start to see double tops. You'll see some triple tops even. You might see some head and shoulders because the profit taking starts to get a lot harder once you get to stage 3, where at stage 2 you see like baby profit taking before we move higher. Stage 3, we're getting ready to go down. That's when fear starts to kick in a little bit. You know, we start to see some people that bought the high, they're willing to break even or even take small losses just because, you know, they might have been through a bear market before and they don't want to get caught. So they start to realize, hey, maybe I might have bought the top. Maybe I might have bought too late in stage 2, to where now, you know, if you buy in here or you buy right here and we get a hard resistance from a previous high, you might be now second guessing yourself. You feel me? Does that make sense, everybody? Want to make sure I'm making sense before I start, you know, keep rambling on and on. So let me know in the chat. I don't want to be talking to myself. But yes, they call this the distribution phase. So you'll see the common emotion that's associated with this phase is anxiety, because like I said, you don't know if you are now what they call dumb money, who bought the top from these banks, from these smart money who bought way down here in stage 1, and they're now in a healthy profit by the time we get to stage 3. Okay, cool. I got one yes. Thank you, Bell. I got one yes, AJ.
Hey, they used to say if they don't say nothing, that means they understand.
You feel me? All right. So the distribution phase, sometimes it could go quick. It might not be a long phase. Like stage 1 is typically a longer phase than stage 3 would be, you know, because like I said, we get real volatile up here to where we transition into stage 4, man. Now, stage 4, that's when things start to get real nasty. You feel me? That's a very emotional time in the markets. That is where fear totally kicks in. So this is a supply phase. This is the downtrend phase. This is a phase when every single rally is getting shorted. Every single pop is getting shorted. We've seen this recently. Every time the market goes up, it tanks right back down. You know, so the sellers have officially taken over. This is where valuations start to slide. This is where some of the earnings start to look a little bit uglier than they did a few months ago. So this is also where you'll start to see the economy might turn bad, or we might have some strong event that may kick us into stage 4. So we've seen wars, we've seen COVID, we've seen, you know, some of the things that's good and bad about us getting into the market at the time that we did. We're kind of getting a crash course on everything. So we've actually seen all of these market cycles in what, maybe 2 years, AJ? We've seen this where typically these are like 10-year events that take a very long time to go through a full cycle in the general market, where we've seen like a condensed version of this at a rapid rate. So it's kind of like trial by fire, where we learning everything, you know, way quicker than somebody like Warren Buffett or somebody that, you know, has been investing for, you know, 40 years, 50 years may have seen throughout their whole investing career. You feel me? So we've definitely seen stage 4 recently, where, you know, it's people that are doing some heavy profit taking. It's a lot of fear, you know, it's a lot of what they call, instead of fear of buying, it's regret that you didn't sell. So it's people who are holding on to things like, dang, I should have sold it, you know, in January. Dang, I should have sold it in March. Dang, you'll hear a lot of that. That's when you know for sure you went stage 4. You feel me? Now, I guess to make it like more plain for some people, because it might be Supplemental Sundays is really for people who aren't as advanced and they trying to learn a little bit more about the market. One way you can look at this, an analogy that I heard, is kind of like fashion trends. So in stage 1, that's when it's like there are very few people who, you know, it's kind of like the beginning of skinny jeans, where it's looked at like it's not cool. Like, why do he got those tight jeans on? I'm not wearing those. You feel me? Now, stage 2, that's when, you know, Levi has Lil Wayne put some skinny jeans on. Now it's like, hold up, them is kind of cool. I might need to get me like one pair. I'm gonna give me one pair. I'm gonna give me one pair. I'm gonna wear them to the skating rink, you know, and I'm gonna see how it go. Like, I'm gonna see, you know, what the vibe is. Now you get to the skating rink and everybody is on you because you got them skinny jeans on. Now it's like, oh no, I need to go back to the mall. You go back to the mall. Hold up, my fault. You go back to the mall and you done bought 6 pair. So now you going crazy. You telling your homies like, no, take them baggies off. The skinnies is the wave right now. So now all your homies is buying them. Everybody's buying up all the skinny jeans. They done sold out. That's when we get up here. Skinny jeans done sold out. Everybody trying to find them. They buying them from their own homies for a higher price than they was at the mall, because they got the faded ones with the rips at the knees that's sold out everywhere. You know what I'm saying? And so now, by the time you get up here, Lil Wayne is not wearing those no more. He's not wearing those no more. Everybody and their mama got him. He done went back to New Orleans. All his cousins got him. So it's like he can't stand out like he like to stand out. You feel me? So now he moving on to something else. He's putting on, you know, some purple capris. Now he got the purple capris on because he don't want to fit in with everybody that got the skinny jeans on. So now when you turn on the TV, it's like, dang, he got the purple capris on, where I'm still cool in my skinny jeans. I should be cool, right? You looking at your homies like, I should be straight, right? Now you go into the skating rink and they not on you anymore. They on the dude that just walked in with the purple capris and the, you know, the choker necklace on. They on him now. And so now you don't even want your skinny jeans. You done pay $80 for them and you ready to throw them away because you can't even give them away. Don't nobody want them. Your little brother don't want them. Your homies don't want them. You feel me? So now everybody throwing away their skinny jeans. That's when we get down to stage 4 and we get to the bottom. Now, once we get to the bottom, you know, some people might wear them every now and then. Some people might not want them. It's like an indifference. Don't nobody really care if you got skinny jeans on. It's not like, oh, you a lame, but it's not like, oh, you popping either. But now we might be in stage 1 for 10 years. And then 10 years later, now, you know, your little cousin or your little nephew that was just born, now he trying to bring skinny jeans back. You feel me? And we started all over. We in stage 2. You feel me? So that's kind of how the same thing applies to stocks, where the celebrities are the big banks. So when the big banks want the stocks, that's when the pump goes. That's when they take off. They done put millions and millions of dollars in, because I promise you, you're not the celebrity in the stock market. If you buy something, you like a drop in the Pacific Ocean. You're not moving nothing. The big banks is what's making a stage 2 bull run happen. Now, when they ready to get rid of them and they like, nah, this stock ain't in style no more. Nah, Amazon, you done played us too many times. We selling you off. That's when that stock or that market goes out of style and, you know, it sells off and back into stage 1. So hopefully, you know, if you haven't invested in stocks before, that make a little bit more sense. And to be honest, these market cycles ain't just stocks. This is any market. This is almost like psychology. where any market that you in, whether it be crypto, NFTs, I've seen it all across the board. They go through these same exact phases. I promise you, if you understand this, you will understand a lot more about stocks than having to learn every single little intricate technical detail. You feel me? Because some of those technicals is hard to get, where if you understand the psychology behind the market, you know, and you understand that when you done got down here and now it's like people are ready to sell their whole portfolio and just hold cash, it might be an indicator like we might then hit the bottom and it might be time to buy more, because I guarantee you, once we get back up here, people is going to buy them same stocks that they sold at 50. They're going to be ready to buy them for 100 to get back in, because now we getting back into FOMO and you starting to cycle over again. You feel me? All right, boom. So now that we kind of got, you know, the gist of market cycles, let's kind of understand, you know, get into more detail about the emotions behind it and the like things that you may consider as we get into these things, right? So the top, all market cycles reach a top, right? At this point, this is when growth is strong but moderating, unemployment is low. You know, some of these things can be variables. Unemployment is not always going to be low. As we've seen, we were at a top where unemployment was high. You feel me? And interest rates are falling. Mind you, this stuff is from Fidelity. This isn't something that I typed. I just kind of, you know, took out some things, maybe added some things, but the majority of it is from Fidelity. Now, however, corporate earnings are under pressure and the risk of a recession is rising. Growth has caused many investors to feel invincible. So you start ego trading, everybody's making money. You think, oh, I could just buy a call on anything, you know, and you making money. You might be a top, you feel me? They buy high on a high, just as the market has crested. Now, what you may feel that everybody is a winner and making money. You may feel some FOMO and you may feel overconfident. Like I said, that's when the ego trading come in, where you feel like you could just buy a call on anything. That was 2020. You could buy a call on anything and you was making money. It's people right now on CNBC from 2020 money that I'm looking at like, you know, goodness well, you don't know nothing about no stocks. But I ain't gonna say no names, you feel me? But it's some people that's eating off 2020 that they done came up and then they just started selling courses, you know, and y'all know how that game go, but we not gonna speak on those. Now, what to consider. Now, at this point, once you start seeing a lot of these things, you really, really, really need to consider shaving to capture gains. Now, that is very difficult to do in the midst of a bull market when you feel like, you know, it's just super easy to make money. That is when you really need to capture your gains, because what you don't want to do is not capture any of your gains and see them all go away. So that money that you see in that account that's making you feel real good means nothing until you cash it out. So whether you got to cash out half, whether you got to cash it out to where your positions are risk-free, whatever you got to do, you need to consider it once you get to that top. You feel me? Now, some people do buy bonds during this time to kind of prepare for a cyclical drop. That's kind of like an old school style. I'm not telling you to do or not do that, but you know, that is something that people do. People also do hold on to some cash. All right, now when we're turning down, after the peak comes the scary downslide. Now the economy lurches toward recession. They start talking about recession on the news. Corporate profits are sliding, like we talked about. You know, the earnings aren't looking like they did the last couple times. You know, even some of the outlook, you know, they starting to sandbag it. And then at first, investors hold out hope for the bull market to continue, because remember, when you're in that top or where you're in the midst of the bull market, you don't really know what the downturn is until it happens. So you think you may be hitting a support and then we about to go higher, but you don't really know. So that's why you have to have some of these things, you know, circling in your mind so that you can prepare for any outcome. Because I guarantee you, nobody saw the first trading day of the year being the top. That was the top for this recent bull market that we've had, where we kissing a bear market. The top was the first trading day of the year. Wasn't nobody talking about that. People was talking like the bull market was going to continue to go, and it didn't. So if you wasn't prepared for something like that, this is when you start feeling these feelings of fear and despair, and the economy shrinking and people starting to sell. You may feel the urge to sell some of your investments to avoid the pain of seeing your balances fall. So like I said, this is when people start breaking even, or they selling for small losses because they scared. They don't know what's about to happen. Now, what you need to consider is protection and patience, right? So as an option investor, you need to be careful with your patience, because what you don't want to do is be too patient and you have that time running off the clock where it's going to be more difficult for your position to rebound. So for a stock investor, yes, protection and patience. For an option investor, you need to be more so focused on protection, whether that be puts, whether that be stop losses, whether that be cashing out early because you don't want to see it go negative. You have to do what you have to do to protect the capital that you put in that position. Now, going to cash can limit your ability to grow your money long term. So again, this is for stock investors, where if you just cash everything out on a downturn, you might miss, because again, we don't know what's going to happen. So you might miss your portfolio, you getting that extra amount, where say if you have a 401k, I don't know if y'all have done them calculators, but when I was working my job, I used to do them calculators a lot. Like, all right, if I cash it out now, like how many years am I shaving off, being retired? Like they be trying to give you that game on them calculators, where that's what this is talking about. Like if you was to just cash everything out, you really might miss out long term. But again, it's your money, so don't take this as law. Like if you want to go all the cash, go all the cash. You got to protect what you got to protect for your account and for your family, really. Now, to combat the effects of fear, take time to focus on things in your life that make you feel grateful. Science shows that gratitude increases patience, right? So this is a time when things start turning down and you start feeling that real fear in the market. Everybody's had that feeling before. I've had that feeling before, and I'm not really scared of nothing, but seeing yourself lose money is just not a good feeling. You do need to step back from your computer sometime and really realize like everything ain't about trading and about stocks. And you got kids, you got siblings, you got mom, you got dad, you got even people that you may know that's in your investment group. Even if y'all have some other type of conversations, or y'all just hop on a Zoom and just chill and drink or something, like you have to do other things to really take care of yourself mentally during market downturns. Now hitting bottom. Oof. For investors, a market bottom is tumultuous and depressing. Stocks can drop more during this phase. Even with a solid plan, you may feel defeated. This can be a point of maximum pain, but also a point of maximum potential. What you may feel is pain and regret of not selling. So once we start getting to that bottom, that's where we done seen stocks dropped, and then they drop some more. So now you feeling like, man, I done did all this research and I really feel like I don't know nothing about the market. Honestly, like I thought, we was going to be cool. I didn't think we was going to go sub 400, and we went sub 400. You know what I'm saying? So that's when, you really have to consider. Hold on. Okay. I'm doing something. You know that, right? Yeah, thank you. She wanted to tell me she saw one of her favorite characters on the Sonic show, y'all. I apologize.
Daddy first, bro. Daddy first.
You feel me? But anyway, so once you start seeing that you at the bottom and you start really feeling, these type of feelings, that's when you got to remember that perseverance is key, right? So anybody that's ever quit the market was never able to get any money that they lost back, was never able to learn from their lessons, was never able to, prove it to themselves that all this information and research that they did and put it to actual use. Now, if necessary, you might have to rebalance your target mix of investments, right? So you don't want to cash out and lock in your losses necessarily on all of your stock, because if you're at the bottom, stocks are on sale. So if you cash out at the bottom, you are going to be killing yourself with FOMO once things start to go back up. I've seen this in crypto. I've seen this in stocks. I've seen this, where people wait all the way till something is down negative 70% and you done sold it. And I'm not talking about options. I'm talking about stocks. Options is different. But in stocks, you done waited till they got all the way down there. You could have sold at negative 20. You could have sold at negative 25. You done waited till it got to the bottom. Now you done sold. Now the next 3 months, it done went up 30%. And you done missed out. You done locked in these nasty losses that you didn't have to, because you basically just quit. Now, if you have to rebalance where you are over leveraged in options, or you have too many high growth stocks, or you have too many tech, or you have, rebalance, figure out, how much cash you want to hold. If you want to switch to some defensive stocks, figure that out when you're at the bottom. So when things do start to go back up, you are able to feel those effects of those powerful rebounds that we have. So historically, powerful rebounds have followed some of the deepest market drops. I don't have the stat. I thought I had the stat on here, but it was like after a bear market, like the average rebound is like 47% on the S&P. That's crazy. So it's like if you sell at the bottom, you missing a crazy return on the other end, especially if you playing options. You talking about 50% on the S&P and a SPY elite, that's a cool 200-300%. You feel me? So don't get so nervous and scared at the bottom that you start making not wise decisions, basically. Now on the rebound, after the bottom comes the cautious enthusiasm of an emerging bull market. Oh, here's the stat. So the economy shows a sign of a rebound. Interest rates are low and corporate profits are rising. So just for an example, what we're seeing right now, we're seeing all of these things opposite, where the economy is looking bad, the interest rates are dumb high, corporate profits are looking a little bit low, not crazy low, but they're looking lower just because of supply constraints and all of that, now. So when we know that we're rebounding, these are some of the signs that we'll see to know that we're rebounding. So really keep that in mind. The average increase in the S&P the year after the bottom of a market cycle is 47%. Really keep that in mind. The average increase. So that means some of these were higher. Some of them might have been lower, but some of them was higher. After the bottom of a market cycle is 47%. But many investors have checked out, and as the market rises, they miss the early, often powerful rebound. So again, this is where that perseverance come in, because you don't want to put all this time, all this money into the market and then sell out, take these ugly losses and walk away. And then the market rises and you done missed it. I know some people even did that last year, where, the end of 2020, beginning of 2021, they was feeling bad. They closed their positions, cashed out. And then that second half of 2021 was nice. And they missed all those returns because they checked out too early. You feel me? So during a rebound, it's going to be hard to forget the pain of the stock market falling. Your confidence will be shaken. You will be wondering if you're cut out for investing at all. But if you stuck with it, you may be nurturing some hopes that your investments will recover. So I know some people is feeling this right now. For this to be in a generic Fidelity information document, that just shows you you're not alone. Like, this is a normal feeling. This is what every investor has felt at some point. They felt these emotions. So don't feel like you stupid. You don't know how to do this. I don't know how Mark is making money and Joe Lynn and, Kiki and all. I don't know how they're making money and I can't do it. Everybody feels like that. Trust me. Some people, they naturally have more confidence and they can hold a better face, but everybody has felt like that. Now, you always want to consider to think like a contrarian. So the stock market is rebounding. If you remain invested, you see some recovery. If your stock allocation has gone below plan, it's time to bring your portfolio back to your long-term target. So remember when we was at the bottom, if you did, readjust some things, once it starts rebounding, now it's time to make sure that you have your long-term mix that you want. So you're going to have to remix it, rebalance, do what you got to do to bring it back to what it's supposed to be. Okay. Now, last one. Now we back. We done went through the whole cycle. Now we're rising again. Okay. So we're back at the beginning. So the bull market is back in play. Investors are back confident. They're getting greedy again. The economy is expanding, stocks going up. People forgetting they whole mix and just doing heavy stocks, heavy options. It feels like everyone's making money again. Everyone, it's the same thing we went through. You feel me? So now this is when you need to remember to hold your greed at bay and prepare for the next downturn. So now you've seen the downturn. We coming back on the up and up. Don't get so greedy on the up and up that you forget what just happened in the downtrend. You feel me? So now your mind need to not just be thinking about the money that's coming back. It need to be thinking about the money that you lost last time and how you need to prepare yourself, whether it be playing puts or paper trading puts or figuring out, which, valuations you have too high in your portfolio or what's too risky or what's over leveraged, what you can take profit on that you got at the bottom and now it's up 100% that you might could shave that and tuck some of that money away. That's what need to be running through your head, the next time we start rising again. So that's kind of everything I had on the market cycle and emotions.
I understand, y'all. Y'all's homework for tonight is to go to the CNN Fear and Greed Index. That's what y'all gonna do tonight, and y'all gonna tap in and see what the current Fear and Greed Index is. Okay. Another thing, only thing, bro, you broke that down. Only thing I would add is just making sure people understand. I would probably start at the daily time frame looking for these cycles. But understand there's cycles within cycles, right? So just understand that as the market is fractal, as you break down to different time frames, you should see these same cycles within, an ultimate bigger cycle. And if you resonate with this strategy and want to learn more and how to trade it, I definitely recommend y'all taking a look at Gerald Peters. I know he trades this strategy heavily in terms of the 4 stages. So that's another gem to give y'all too, if this strategy did resonate with you and you want to learn more about it.
That's a fact. No, that's a fact. It definitely, like she said, there are, you'll see these things on all different time frames. So if you're looking at the weekly, you'll get, I usually stick to, because the monthly is almost too big sometimes, unless you go on like a 10-year, outlook. But I usually would start at the weekly to look. I could show you all, hold on.
Yeah, how you do it. And then work your way down.
Yeah,
that's what I would advise too. And that's another thing, y'all start zooming out.
Definitely.
Like, shout out homie Zay. He always talk about making sure we zoom out sometimes. So that's another thing.
Let me see if I can get this shit.
Okay.
I don't want to show y'all my good chart. Y'all don't need that. Y'all need the generic one.
Oh man. Listen at you. Listen at you.
What?
Generic.
All right, close my door, man.
Don't stop them from learning. Don't do my babies like that. Let them learn.
They ain't trying to learn nothing. They trying to got some cartoons. All right, for this,
you see your little share screen now, right?
Yeah, let me share this. this one here. You can see that.
Yep.
Okay, so boom. So we'll go to the weekly. Okay. So this is IWM. It's a little bit of a better example than SPY is right now. So you can see, right? You can see, so we came out of the pandemic. That was kind of like it's like a rare event. So sometimes you'll get those where it just break the whole cycle up. So I'm gonna just go ahead and slide that up off of there just for the sake of confusion. Now you see we have stage one right here. So after this event that we had with COVID, we had a very small accumulation phase that didn't last long at all. As you can see, it was what is this, like June to October maybe, when we started breaking that resistance. But once we broke it, we got right into stage two. This is greed. This is everybody's a winner. Everybody's making money, and now we get to stage three. So this is when it starts to get choppy. You see those long wicks? That's where it gets choppy, where the buying is, volatile, the selling is volatile. You see some of these high volume days in here. And then that lasted a decent amount of time. I would say, almost 10 months, 11 months.
Yeah.
So that was a long stage three. You don't typically see stage three being longer than stage one, but it is what it is. It happens sometimes. Now, if y'all see, we had this hard push up in November and then just straight sell off after that. So this all right here is stage three, where we haven't even seen it get to stage four, where we haven't even seen it get back to stage one yet. This is still in the middle of stage four, where we done got all the way back down really to where we was right coming out of stage one.
Exactly. So from a trading perspective, y'all, you just think about it like, okay, if I'm sitting in stage one and we accumulating, right, then I know as soon as we break out of that, I can be in my calls. As soon as I start to see that chop where, we got that distribution, it's like, okay, well, now I know I need to be preparing to get in my puts, right? Exactly. And that's how you trade your stages.
Exactly, because you see, look, we had this support right here. This is a good example of support and resistance too. We had this support right here in stage three. Soon as we broke that support, it got ugly. So we broke that support and dang near pretty much went right into stage four. Soon as we broke that, now we had some buyers to try to rebound it. But once you saw this, it tried to hit that resistance again and couldn't make it. Perfect technical example. So right off heavy. So this right here, this candle right here, this would have been a good place to play puts. Now down here, I wouldn't play puts down here because this is the reverse of stage two. You don't want to get too greedy, because if you was to turn this upside down, this would be the top. This would be an area where you kind of want to wait to see it get into that stage one before you start playing puts or doing anything crazy like that, because you might, be able to get some money out of it. But it's like you really done missed the bulk of the trade where you gambling now, So now you could break this down to a smaller time frame. You might be able to see something better, because I know some scalpers in the chat. No disrespect to the scalpers. I know y'all can make money in any market. I'm trying to stick to the people that's just now learning how to trade, so they don't get caught up. Everybody saying puts and they hop in puts on IWM down here, and it start to accumulate, or it start to bounce, or I don't want y'all to get caught up where we done already had some heavy selling. You feel me? Not to say that it's over, but we done made a good portion, if not 50-60% of the move down that it could possibly make. It's already happened. You feel me? So, but this is a great example. So y'all could go on any charts. A lot of charts is good right now, especially to take a look at this, because we are in a heavy downtrend in a lot of charts where we're in a lot of stage fours across the market. So now you'll be able to gauge and keep track. Okay, have we gotten into stage one yet? When are we getting into stage one again? Are we getting into accumulation? Is the selling slowing? And there are some buyers stepping in, because right here in a green candle in four weeks. The last green candle was back in April 11th, where we had some buyers on IWM on small caps. You feel me? So y'all can go through that, and then, like she said, take a look at the fear and greed index. That's a good indicator to see, because they have all these different metrics that they use to gauge the fear in the market. That's another way to see, okay, are people too greedy? Are we in a different phase? Are people too fearful? So really you can kind of start gauging when we're getting back into stage one off of that fear and greed index too, to see when people are starting to get greedy again. I guarantee you they're not greedy right now. Guarantee you that. It's a lot of fear in the market, but you'll be able to use these tools that are kind of simple to help you start to gauge things that you might not have really thought about before we went through this downtrend.
That's a fact.
But I'm done. I'm off my, I need some water.
Okay, babe, you better take your sip, bro. My mentor deserved his sip of water tonight. Listen, you came with it. Okay. You broke it down, bro. You killed me. Why the purple capris, though? We wanted to talk about that. The purple capris. You couldn't go back baggy or something. You had to go to the purple capris.
I swear Wayne wore some purple capris.
Bro, that was when he was on his trunk fit with all them colors and stuff. Like he was wild.
And you see that stage 2 went quick. I ain't put the muds on. Yeah, nah. I sat the side. I stayed in cash on those.
Listen. Oh, so you ain't go to the H&M to sell them out?
No.
What if I see you in them Kanye West Yeezy boots? I'ma scream.
Nah, don't do it. I'ma
scream. I'ma scream. I am going to scream.
Hey, look, you don't see me dress in real life. I'm not putting no Yeezy boots on.
Let me stop cutting up. Okay, so listen, for the week ahead, y'all, I'm excited. It is a retail earnings week. I mean, we can't even get baby formula on the shelf, so I'm trying to hear for some people. Like, I got questions. So on Tuesday, y'all, we got Walmart, we got Home Depot reporting. Shout out Ashland, C Limited reporting. Y'all in y'all's gaming, you feel me? On Wednesday, we have Target reporting. We got Lowe's, we got TJ Maxx, we got Synopsis. On Thursday, we got Applied Materials, Palo Alto, and Friday, we got John Deere, okay? So like I said, just some of the things I'm gonna be looking into this week in terms of earnings, all right? In terms of conferences though, okay, there's a couple of conferences going on that y'all should probably just be notified about with John Deere and Home Depot, Lowe's, all of them reporting this week. We got the JP Morgan Home Building and Building Products Conference. So that might, trigger some of these names to move this week as well. We also have the Bank of America Global Metals, Mining and Steel. So be looking out in that space as well to see some movement. And like I said, guys, these are all just things to keep an eye on and to be aware about in terms of why certain things might be moving in the market this week. We got the Wells Fargo Financial Services investor event this week. And we also have the RBC Global Healthcare, okay? 2 investor days this week that I want y'all to be paying attention to. We got Cat Investor Day and we also got Block. All right. So just be looking to see what some of their investors are saying about, guidance and everything in terms of supply chain, all that good stuff, interest rates, blah, blah, blah. In terms of your economics report, though, for this week, okay, we got a lot of Fed people speaking. All right. So just keep your head on the swivel. I think Williams speaks on Monday. Bullard, who y'all know, on Tuesday. The market tends to feel a type of way. So make sure you're just paying attention and monitoring these things. Powell also speaks on Tuesday, okay, as well as Mester. So you got a slew of FMOC and Fed chair people speaking on Tuesday. Wednesday, we get into more building and housing permits, also crude oil inventories. And then come Thursday, we got our unemployment claims and existing home sales, all right? Also, if you've been following natural gas with everything going on in oil, blah, 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 they also have some things coming out on natural gas on Thursday as well. So guys, we just do these each week just to keep you informed about what's coming ahead of you, why you might see certain things moving the way they do in the market. So just make sure that y'all are paying attention, keep your head on the swivel and follow your trading plan. But that's it for this week.
That's it, y'all. So, hey, like I said, keep these things in mind. You know, look at some of these charts with this in mind now. If you gotta pull up that graphic and pull it up and try to, just match where we at with it. Really take heed of these things, man, because we're telling y'all for a reason. This is a critical time in the market where we are. I know a lot of stocks, and I think even the NASDAQ was in a bear market, but SPY hit what, like 19 point something, like it didn't fully go in a bear market, and we kind of bounced from there. So just keep an eye on these things, because some of this stuff, it feels like our emotions get tied up in the money, and we start to lose sight of this is normal market behavior. You feel me? We just having economic events that are accelerating it, but this is normal market behavior. So we need to treat it as such and not get so tied in to our losses or to our original thesis. You got to be adaptable and, just use all your resources available. This is not something that I wrote. This is something that I learned on YouTube. I learned through Fidelity, Investopedia. Like, the information is out there. We just trying to help y'all, sort through it. That's it. But AJ, did you have anything else?
Y'all, it's just a lot going on in the world. Make sure you love somebody. Hey, it's bigger than options. So like T said earlier, like, take a break away, check in with your family, check in with your people. And yeah, just be a blessing to somebody else this week. That's all. And like I said, just keep practicing. That's it. Keep practicing. Don't feel the need to rush into the market right now. Let it do what it's, going to do, so you don't get out here catching falling knives and stuff. Just have a plan. Be patient. Let it show you what it wants to do.
For real.
That's my best advice. Yeah.
No, that's great advice. Shoot, I took a week off. I had Mother's Day on Sunday, my daughter's birthday, my daughter's 4th birthday on Wednesday, my birthday on Thursday. My 2 oldest kids had their field day all day on Friday. I had to go to that and, show out. You feel me? So it's been a long day, but I'm getting my melanin back. I've been in the sun. You feel me? So
okay.
You feel me? We getting black this summer.
Man, no, but for real, we getting real black. Like, I don't think y'all understand. I'm out here. Okay,
outside.
I'm outside. I am living very leisurely this summer. Don't y'all judge me. I'm telling y'all now. I will be living very leisurely.
Listen, we definitely outside, but yeah, get outside, touch some grass. You feel me? The grass is greener than them candles. I promise you. What I'm saying. But no, we appreciate y'all. We love y'all tapping in.